To watch these important lessons, subscribe to DP Education's YouTube channel right now. Click on the bell icon to stay updated on the latest lessons. Sri Lanka's largest free online school, DP Education.
Hello guys, welcome back to the Business and Accounting. Today this the last question of the 2020 Western Province third term paper. Yeah, that's it. The 2020 Western Province paper of the third term. That's what we are going to do today. And in that paper, this is the last question. The 2020 WP Western Province. Yeah? Third term. Okay. We normally do third term papers. Yeah. You know, it's nothing wrong with the first term or second term, but third term gets you the entire list of, entire what do you call it? Entire what? Entire story, entire case, entire syllabus for that year. Yeah, the third term paper carries all the lessons. It covers all the lessons, the entire story of that year. Okay, so third term paper of Western Province. And this is the second paper, we know that. In the second paper, last question, we know that too. Seventh question. This is the financial statements question in the accounting part. For some, I'm not using most. I'm not using the word most. For some children, this question is the difficult one, you know. They say, "Hiyo, sir, the seventh question, the financial statements never balance." So if it's a headache, just even when we start the question, we are like, "You balance way the danne, me karam balance enne, we karam karaganne." Okay, if you start something in that vibe, thinking that, "Ayyo, this is a utter mess. This is gonna be a loss, like a failure. It's not gonna balance. It will fail to balance." I know that. If you start something in that vibe, anyway, it's gonna mess up. Okay, you get what I'm saying? So start positively. It's nothing difficult. It's nothing hard. If you know the system, how to do it. I always say that. Okay. Enough talks. Let's just start the question. First part, Roman number 1. Name 2 steps of calculating profit or operational results of a business by preparing profit or loss account. Name 2 steps of calculating profits or operational results. What are they asking here? Can you figure it out? Can you figure it out? 2 steps of calculating profit or operational results. You calculate profits or losses of a business. Yeah, that is called, children, that is called operational results of a business. Operational results of a business. If you calculate a profit, it's a positive result, and if you get a loss, it's a negative result. It doesn't matter. You have to be ready for both of them. Well, of course. You can't expect only profits if you are doing a business. Yeah, you have to be ready for losses too. So profits or losses, you have to be ready for both of them. Whatever it is, when you calculate the profit or losses of a business, that is called operational result. Okay, operating for a period of time, let's say January, February, March, April, May, June, July, August, September, October, November, December. For this entire period, for 1 year's time, operating your business, the operational activities result in what? Result in a profit or a loss. That is an operational result. So it could be a positive result, that's a profit. It could be a negative result, that's a loss. So operational results, okay, got it? 2 steps of calculating profit or losses of a business by preparing profit or loss account. What are the 2 steps? The trading account part, the trading part, and the below part is the profit or loss part. Didn't get it? The gross profit section and the net profit section. Now you got it. Of course, right? You know, and you have prepared profit or loss statements, and you have calculated gross profit and net profit, so you know. Yeah, there's 2 steps is the 2 steps of calculating profit or operational results by preparing profit or loss account. The gross profit and the net profit. And the net profit. Got it? B. It should be B. B part. Write the double entry of recording bad debts. Write the double entry. Write the double entry to record bad debts. Guys, who knows? Who can tell me whether bad debts is whether it's a what asset or a liability, income or an expense? What it is? Liability? No. Who said that? No, it's not a liability. Expense, yes, expense. That's right. Very good. Bad debts is an expense. Okay. It is a loss actually for any business. Loss in a sense, it's an expense. When debtors of our business, the debtors of the business, completely or partly neglect, they refuse, or for any reason they couldn't pay back what they are owing to the business. Nayakaryo, nayagetyo, naya nogeva. When that happens, we call it a bad debt. So it's a loss, of course. What's the double entry? to record this transaction? Because it's a loss or an expense, because bad debts is an expense, you debit the bad debts account. Bad debts, debit. Bad debts, debit. Okay. And because the debtors of the business, because the debtors are decreasing, debtors of the business are decreasing, you credit the debtors. Credit the debtors. Debtors credit. Debtors account, that particular debtor who neglected to pay, that debtor's account credit. That is the double entry. Bad debts account. Debit, debtors account, credit. Yeah? Yep. Second part. The information of a children's chairs. Children's chairs manufacturer. You know what? Why I was having a giggle? You know why I was smiling? Normally, guys, the seventh question carries financial statement questions. Financial statement questions. But yeah, the first part and the second part, I mean the Roman number 1 and Roman number 2, those questions have, most of the time, those questions carry non-profit organizations. Questions from non-profit organizations, not for profit. Yeah. Clubs and societies. Yeah. I thought this paper, 7th question, this part must be from not-for-profit, but no, it's from manufacturing. Now you start to think, what is manufacturing? You don't know what is manufacturing. Production cost. Statement of production cost. So it says the information of children's shares manufacturing business for the month of January given below. Now, what type of a business is it? Yeah, children's chairs, manufacturing children's chairs for a Montessori or for a nursery, you know, for primary schools. They are manufacturing children's chairs. Units 1000, no, units 100. That means 100 chairs per month. Direct expenses 40,000. Transportation cost per unit. Transportation cost per unit 5,000. Okay. Production cost per unit 500. Wow. Okay. Keeps 25% profit margin. Keeps 25% profit margin on cost when deciding the selling price. All right. Total production overhead cost for the month of January. Production cost per unit 500. Okay. Right. It's kind of odd. I mean, it's kind of unreal, right? All the direct expenses, I mean the direct costs is 40,000. Okay, and just forget direct expenses. The production cost per unit is 500. That means to produce a chair, for one chair, the cost of production is 500. Cost per unit for one chair. And to transport that chair, it's 5,000. Transporting only for one chair, they're spending 5,000. You know, are they transporting the chairs abroad? I don't know. It doesn't matter, okay? We'll just go to the question. What is the question? Overhead cost. Total production overhead cost. Production overhead cost. Right. How to do this? How to do this? It's simple. We'll do it the easy way. Okay. Now, children, we know that the total production cost. No, the production cost per unit. We know it's 500 to make or to produce one chair. They spend 500. Yeah. So let's take the total production cost for all 100 chairs, because this is the number of chairs produced. Number of chairs produced. Number of chairs produced, okay? Hundred chairs are produced. 100. One chair costs 500. One chair, for one chair, the production cost per unit is 500. So let's take the total production cost. Total production cost. Total production cost. Uh, 500 unit cost into 100 chairs. 500 into 100 chairs. That becomes how much? That becomes 50,000. 50,000. That is the total production cost. Okay. Then let's take out the direct costs from that. Easy. Easy. How much is the direct cost? Total direct cost is given as 40,000, right? This is the direct cost. See, wait, this is the direct cost. See, direct cost means total of the direct cost is 40,000. So direct cost means prime cost. Total direct costs means prime cost. The total prime cost, okay? The total production cost is made up with prime cost and overhead cost. When you add up, the addition of prime cost and the overhead cost becomes total cost. This, when you add these two, it becomes total cost. Okay. So from total cost, when you take out prime cost, you get overhead cost. So this is the prime cost. What we have to calculate is the overhead cost. We have to calculate total production overhead cost. So production production overhead OH cost is 50,000 minus, from this 50,000 you minus 40,000. You get how much? From 50,000 you minus the 40,000, that is the prime cost, and you get the overhead cost, 10,000. All right, this is the overhead cost. Easy peasy. Yeah. Production overhead cost 10,000. Likewise, next what we have, a selling price per unit. Selling price. Whoa, that of course is related to this. 25% is the profit margin on cost. Okay, on cost 25%. When deciding the selling price, and they are asking what is the selling price per unit. Selling price per unit, okay, not the total sales income. Of course, they normally they ask the selling price of one share, 1 unit. That is how the questions come. So we'll calculate the total. No, we'll calculate the unit selling price in this manner, in this way. First this is A, and now we are doing B. Selling price per unit. Let's take the unit cost. How much is the unit cost? Unit cost is this. Production cost per unit 500. Unit cost is 500. So let's take that. Unit cost that is 500. Yeah. Unit cost is 500 rupees. Don't forget the rupee mark now. Don't forget the rupee mark. Even for your answers, don't forget the rupee mark. Don't forget to put the rupee mark. Please. Right, so unit cost is 500 as it is given here. Unit cost is 500. And they say from 1 unit, they keep 25% profit margin on cost. 25% profit margin on cost from the cost of 1 share. You have to calculate 25% from this, okay? 25%. So let's calculate 25%. 25%. That is this 25 profit margin. 25 over 100. And the answer is from 500, 25% means 1/4, no? 1/4. It's 125. 125, 1/4. Yeah. This is not the answer. This is not the answer. Huh? This is not the answer. That is the profit. 125 is the profit. Because this is the profit margin. You multiply the profit margin on cost and you get the profit. You get the profit. This is the profit. But they are asking not for the profit, they are asking for the selling price. Okay. So, what should you do? You know what to do, right? If they keep a profit of 125 from one chair, the chair is costing 500 rupees to produce. Under 500 rupees. Yeah, that means they spend 500 per chair to make one chair. So 500 plus they need to keep 125 as the profit. Then they have to sell it for 625. Got it? 500 plus 125, 625. That is the selling price. You have to write it down. Write it here. Use the same color. I'm just using colors for your, convenience. Easy to identify the things. Selling price per unit. Selling price per unit. Selling price per unit. I can write unit selling price. Unit selling price. Unit selling price. Unit. Okay, you know that. You know. Unit selling price. 625 is the answer. Yeah, can see that, right? Yeah, easy calculations. I know. If you get these type of questions on your exam paper, you're lucky. Next question. Oh, here we go. The big one, the trial balance of Chandani's business. Chandani, okay. It's a lady. Chandani's business is given as at 31st December 2019. Righto. Yeah, Chandani Paila has started a business. Trial balance is given as at 31st December 2019. So the end of the period is 31st December, end of the year. Yep, here you go. This is the trial balance. On the next page, we must be having additional information. Righto. Additional information. Likewise, they have given additional information. Yeah. We have 1, 2, 3. 1. Closing stock 35,000. 2. Depreciation of machines. 3. Written off 10% as bad debts from debtors. Bad debts. Oh yeah, you need to adjust these additional information first. But first of all, what we have to do, profit or loss statement for the year and statement of financial position as at 31st December. The balance sheet. The balance sheet is the word that we used before. After the syllabus revision, somewhere in 2000, I can't remember, the name of the balance sheet was changed to statement of financial position. Not relevant to you, okay? It's not relevant. All right, first step, as I always say, to tackle this question, first of all, remember the steps. one step at a time. Yeah, even the furthest, the most uh, difficult journey is started by keeping the first step. So, step by step, the first step is label your trial balance items. Label them. Label. That's what I always say. That's how I always do. I do. First thing I do is labeling. Okay, labeling means what? Label alone again. No. You have to label each item by thinking whether the item should be going to the profit and loss statement, or the item whether it should go to the SOFP. Thinking about that, and labeling the items. First item, land and building, should go to SOFP. Just use two letters, FP or PL, PNL or FP. Land and building should go to FP. Machines should go to FP. Provision for depreciation should go to FP. Stock of the 1st January stock should go to PL, SOPL, profit or loss. Yeah, sales should go to PL, purchases should go to PL. Purchases should go to PL. Discounts received should go to PL. Discounts allowed, PL. Carriage inwards, PL. Bank loan, FP. Bank loan. And there is an adjustment here. Always do not forget. Here there is an adjustment. Keep it underlined or keep it marked, because there is an adjustment. It's a hidden adjustment. Okay, and it is connected to this bank loan interest. Okay, so this goes to bank loan goes to SOFP, it's a statement of financial position, but this goes to bank loan interest, poly, it goes to P&L. Yeah, and there is an adjustment too. I have marked it so very clearly. When we do it, we can do it. We're not going to do it now. Okay, salaries and wages go to P&L, profit or loss. Debtors go to FP. Creditors go to FP. Advertising expenses, SOFP, right? Statement of financial position. Yeah, advertising. Now expenses go to, all the expenses go to P&L. Loading expenses also P&L. Bank loan interest I have marked should go to P&L. Electricity charges P&L. Rates and insurance P&L. Capital is here. Capital go to FP, financial portion. Cash balance also FP. Got it? Beautiful. Now all are marked, well organized. Yeah, now the next step, the second step is drawing the statements. You should draw the statements. Formats. Let's take a blank page, shall we? Now, children, guys, remember this, huh? You have to prepare both statements parallelly. You don't prepare the profit or loss statement and you calculate gross profit and you calculate net profit, and after the statement is finished, then you start SOFP. No way, you don't do that. No, you have to prepare both parallelly. Like this side SOPL, this side SOFP. Both should be drawn at this, like, together and done together, filled together. Okay, so I'm gonna draw it here, the SOPL. I use these short forms because those are, easy for me. SOPL means a statement of profit or loss. SOPL. SOFP means statement of financial position. That one on this side. 1, 2, 3 columns. Right? Yeah. On this side also 1, 2, 3 columns. I mean, for the amounts, you have 3 columns. You need 3 columns. Names. I mean the titles, names. Chandani's business. Chandani's business. Right. What is the statement? Profit or loss. Profit, loss. Statement. Do not forget to put the date, and don't forget that it's profit or loss is prepared for a year, for a period. Okay, for the year ended. 31st December 2019. Likewise, you have to put the names of the statements. You get marks for that. Okay, get marks. On this side, SOFP. Chandani, the same girl. Of course, it's the same girl. Chandani's business. Okay. Statement of profit or loss. Statement of financial position, man. Distracted. Statement of financial position. Statement of financial position. Got it. as at 31st. Right, 31st December 2019. Okay. Name the columns too. Name the columns too. Because in the SOFP, first column, the amount columns, the 3 amount columns, has names. You have to name them. Cost column. Second is accumulated depreciation column. Third column is carrying value. Or you can even call it the net book value column. Rightio. Done. But not done yet. We have to put the headers, the main items in both these statements. In both statements, in the profit and loss statement, on top you have sales, then you have cost of sales. Cost of sales. Put the minus or the subtraction mark here, because from sales you minus cost of sales. From sales you minus cost of sales. Okay, got it? Next, under cost of sales, you need these 4 main items. Under cost of sales, you need three main items. 3 main items. Okay, you have to write those 3 main items under cost of sales. What are the 3 main items under cost of sales? Opening stock. You have to write the full form. You can't write OS when you're answering the paper. Plus purchases. Opening stock plus purchases. The 3 main items, plus purchases, minus closing stock. But why did I leave some space under purchases? Why? Why did I leave there? Why did I leave some space? Why? Here. Why did I leave some space here? Because there are purchase related expenses. You might get purchase related expenses. You might not get. Just in case, leave 2 lines, 1 or 2 lines under purchases. I always say that. So, cost of sales, under cost of sales, opening stock plus purchases, space for 1 item, then minus closing stock. Yeah. All right. Then leave like 2 more lines. Leave 2 more lines. Next item is actually the upper part is done when you get the gross profit. Then you get in the lower part, other incomes. Other incomes. Yeah, leave couple of lines under other incomes. Then you get expenses. Expenses minus expenses. Get it? You get it? Minus expenses. Under expenses, you get 3 main types or 3 main categories. First, I'm going to extend the lines because we need more space down. Under expenses you get what? You get what? Under expenses you get three main categories of expenses. Actually it's four, not three, four main categories. Distribution category, distribution expenses, administration expenses, financial expenses, and other expenses. First category, distribution expenses. Distribution, huh? Distribution expenses. Leave like 5 lines for distribution expenses. Then administration expenses. I'm just using short forms. Admin expenses. Then financial expenses. Can see it now, right? Yeah. Financial expenses. Leave at least 4 lines for admin expenses. Then financial expenses. Financial. Expenses. Got it? Financial expenses. Finally, you get other expenses. Most of the time you don't get other expenses, but just write if in case you get other expenses. Got it? All these are headers. I mean, they are like topics, main items in the profit or loss statement. Now we are done with the profit or loss. We are going to the statement of financial position. Non-current assets on top. Non-current assets on top. Non-current assets. Then you get current assets. Leave at least 3 lines. Better you leave 4 lines for non-current assets. Then current assets, leave at least 4 lines for current assets. Then you get total assets. When you add up non-current and current assets, you get total assets. Got it. Yep, like this you get total assets. Go further down. The part below, under total assets you get equity and liability section. Equity and, this is the part which is below assets section, that is the equity and liability section. Equity and liabilities. Okay. Equity and liability section. Under equity and liability section, first you must have capital. Yeah, capital, because it's equity and liabilities. Capital. To that, add net profit, and subtract drawings. This is the equity part. Capital plus net profit minus drawings. Then liabilities part. In the liabilities part, you get non-current liabilities, then current liabilities. Non-current liability. Keep like 2-3 lines for non-current liabilities, then current liabilities. Current liabilities. Got it. Sections are underlined, so it's easy to recognize. Got it? Yeah. All right. Let's start with the additional information on the other side. In the question, we get additional information. Number 1, closing stock is 31st December 2019, 35,000. Go and record the closing stock. We already know that every additional information must go to both statements. Okay. What? You're making fun of my accent? You're making fun of my accent? Huh? Yeah, should be fun, you know. Doing papers is stressful, but don't stress out. Have fun doing it. Yeah. Information. What were we doing? The closing stock. Yeah. The closing stock is here in the profit and loss statement. So you should put it to the second column. 35,000. Must be subtracted, all right? It is subtracted in the cost of sales calculation, from the cost of sales calculation. Closing stock is subtracted. You have put it, we have put it to the profit and loss, and now we have to put it to the SOFP, financial portion statement. Under current assets, closing stock. Closing stock should be under current assets. Put it to the second column, 35,000. Put it to the second column, 35,000. Under current assets. Yeah. Okay, next adjustment. First adjustment done. Next adjustment. Machines are depreciated on straight line method. Machines are depreciated on straight line method 10%. Okay. Straight line method is the only method in your textbook now. Previously there was another method many years back. Now you don't have to worry about it. It's not relevant now. You only get this method, straight line method. It's easy. Take the cost of the machine and depreciate using 10% on cost. First, take the cost of the machine. It's here. Cost of the machine is here. 300,000 with the cost of the machine. Take that 300,000 multiply by 10%. 10/100, and the answer you get is 30,000. $300,000 into 10%, 30,000. This goes to P&L because depreciation is an expense. Depreciation is an expense. Yeah, it's an expense, depreciation, right? So 30,000 should go to P&L. Under which expense category? 30,000 depreciation should be under administration expenses. 30,000 depreciation. You have to write depreciation of machineries 30,000 in the first column. Okay, children. Okay, 30,000 in the first column. Right, then you know that each and every additional information should go to both statements. No, it's entered here. Now where should you enter it? In the SOFP. Where in the SOFP? Where? Under non-current assets. First, mention the machineries under non-current assets. The cost column. In the cost column, 300,000 because that is the cost. Then in the depreciation column, you put this 30,000 that 30,000 that we calculated. This one, yeah, which you entered into the SOPL. The same thing you enter to the SOFP, right? This 30,000, right? No. The same thing is not entered to the SOFP. No, you have to check, my dear guys and girls, you have to check whether there is a provision for depreciation, and it is here. See, the trial balance, you have to check whether there is a provision, and there is a provision too. Provision is also 30,000. What you do is you take this 30,000, add it to the 30,000 that you calculated. It becomes 60,000. The total depreciation with the provision you enter here in the SOFP, 60,000. That is why it is called accumulated depreciation. It is the accumulated, the added up value you should enter. Got it? From 300,000 cost minus 60,000, answer is 240,000. That is the carrying value. Easy as that. Done. Next, last one. Written off 10% as bad debts from debtors. Now in this paper, the bad debts is given as a percentage. but in most of the papers bad debt will be given as an amount. Here a percentage is given, so you have to calculate it. From the debtors, where are the debtors? Debtors are here, 15,000. From this 15,000, calculate 10%. Debtors 15,000. From that, calculate 10%. 10 over 100, and the answer is 1,500. This is the bad debt. Got it? Yeah, got it. Bad debt. Now you go and record that. Bad debt. From debtors 15,000. You took 10%. Because they say 10%. Yep. You took 10%. Calculated. Where to record? Where? First to the SOPL. Because bad debts is an expense, it should go to the distribution expenses. Bad debts. Hey, keep space for other items. I mean, there are many items under distribution expenses. We have small space. See, a very small space. Bad debts. 1,500. 1,500. Now, where to enter in the SOFP? Where to enter? Under current assets, from debtors, you subtract. First of all, write debtors in the first column, 15,000, and from that minus 1,500. Or else you can do it this way. From debtors, 15,000 minus 1,500 in front of debtors. 15,000 minus 1,500, 13,500 directly to the second column. After subtracting the answer you get, put to the second column. 15,000 minus 1,500, 13,500. Done. Next. Oh, it's done. There is no next. All additional informations are recorded. Done. Now, the last step. Going to the trial balance items. Let's go. From top. Oh, something we forgot. We forgot the land and buildings. We didn't forget. Now only we are getting the trial balance items now. So on top, land and buildings is there. Take it and take it to the SOFP. Land and buildings, 500,000. Why did I say we forgot? We wrote the machineries on top under non-current assets. You can't write machineries on top. It should be the second item. First item should be land and buildings. First item should be that. Now we have to erase it and put land and buildings. But nothing wrong with the amounts, nothing wrong with the values. 100% correct. Right? We'll just remember the values. Cost 300, accumulated depreciation 60,000, and 240,000. Just remember the values, and put land and buildings on top. Land and buildings on top. Cost is 500,000. No depreciation, so the carrying value also 500,000. Now we'll put machineries. Nice and shine. Machineries. No problem. Remember 300,000. Accumulated depreciation is 60,000. Yeah, and the carrying value is 240,000. Done. Done deal. No problem. No problem at all. Okay. Next item. We took land and buildings, took it. So tick it. Don't forget ticking. If you forget ticking, what's going to happen? You don't know which items have been taken and which items have not been taken. So tick it. Machinery is also taken. Provision for depreciation also taken. We took it. We took it. Tick it. We tick it. Provision for depreciation taken. So tick it. Stock have to take. Stock to the P&L 50,000. Oh, where is stock? That is the opening stock, guys. It's here in the P&L 50,000. Put it to the first column 50,000. Next, stock is taken. Yeah, sales. Next is sales. 400,000. Take it to the P&L. On top, 400,000 in the third column. Sales go to the third column. 400,000. Take it. Tick it. Purchases 120. To the P&L. To the P&L. It's already here. That's why I have given you this system. When you record or when you enter the main items or the headers, when you begin the question, when you start the question, if you have done that, if you have put all the headers, headings, it's easy. It's easy. You know where, when you see an item in the trial balance, you know where it should be entered because it's already, the format is already complete. The main headings are already entered in the statement. So it's easy. Purchases 120,000 in the first column. 120,000 in the first column. Ticket. Ticked. Discount received. 3,000. It's an income. Received is an income. Discount received is an income. 3,000. Profit or loss statement. Under other incomes. Discount received. CIEVED, discount received. $3,000. Put it to the second column or put it to the third column because only one discount received, only one income is there. You should add it to gross profit. Discount received to the third column. Done. Tick it. ticked. Discounts given is a discounts allowed. This is discounts allowed. It's a expense. Profit or loss. Distribution. Profit or in the profit or loss distribution. Discounts allowed. It's discounts given. Same thing. Discounts allowed. It's the same thing. It's known as discounts allowed. 2000. Ticket. Discounts given. Discounts allowed. Tick. Carriage inwards. Here we go. Carriage inwards is a purchase related expense. Carriage inwards is a purchase related expense. So that's why we left. We kept that space under purchases. Yep. Yes. 6,000 carriage inwards going to the P&L under purchases. Under purchases. See, we left this space. Yeah, it's for purchase related expenses. There are purchase related expenses such as if you know, you have to tell me now. There are purchase related expenses such as carriage inwards, loading and unloading, what? Import duty, import taxes, such items. Purchase related expenses, yeah. Then we got carriage inwards here. Carriage inwards 6,000 under purchases. Got it? Under purchases. Took it, so ticket. Done. Now the bank loan adjustment. We already marked the bank loan adjustment, and I explained it. I told you that there is an adjustment here. You should know that there is an adjustment here because there is an adjustment here. Got it? Let's do it. Bank loan is a 10% bank loan, which is, it is given here. See, 10%. Bank loan is a 10% bank loan. It is given right here, 10%. What this 10% means? What it means, children, it means that from the bank loan 120,000, you should calculate 10%. And the answer you get is 12,000. That is the interest. This 12,000, when you calculate 10%, is the interest. Bank loan interest. Okie dokie. Yeah, bank loan interest. This interest is the correct interest for the year. For the year, poly interest is 12,000. Yeah, 12,000. But as you can see, there is a bank loan interest given in the trial balance too. We have marked it, and it is 6,000. That bank loan interest given in the trial balance is the paid interest, paid value or paid amount, which brings us to a confusion, which brings us to the confusion of what the world is the problem here. What the world is the problem here when we calculate the bank loan interest it's 12,000. Huh? Because the bank loan is because the bank loan is 120 and 10% is 12,000. What the world is the problem here? Um, giving bank loan interest as 6,000. The problem is from 12,000, the interest, annual interest from 12,000 annual interest, they have paid only 6,000, which means 6,000 is remaining. That is accrued. That is what you should realize here. What to do? First of all, record the correct interest, annual interest, under other expenses because it is an expense. No, not under other expenses, under financial expenses. Under financial expenses, bank loan interest. Which amount, which value do you record as bank loan interest? Not 6,000. No. 12,000. 12,000. Got it? Yeah. Then go to the SOFP. Go to the SOFP. Under non-current liabilities, put the bank loan. Under non-current liabilities, put the bank loan. Why? Because the bank loan is a non-current liability, of course. It's a long-term liability. 120,000. I'm just remembering these figures. I'm remembering them. 120,000. And under current liabilities, you have to put bank loan interest remainder. Remainder means the unpaid amount, which is bank loan interest accrued. A. Keep space. Bank loan interest accrued. Interest accrued. Accrued. Okay. Accrued. That is 6,000. Okay. I did, over explaining as always. No need to explain it like it's something new we have done. Even in previous papers, we have done this adjustment. Okay, right. So that is how you do the bank loan interest adjustment. Sometimes the bank loan interest given in the trial balance is the right interest, is the right annual interest. Sometimes in some questions, this bank loan interest given, this one given here, is sometimes the right interest, like 12,000, the correct interest is given sometimes, but not in this question. So you have to calculate the accrued interest too, just like we did. Okay, done. Bank loan we recorded, so tick it and go to the next item. Salaries and wages, take it, it's an expense, 8,000. Take it to the P&L, because it is an expense. Under admin expenses, salaries, 8,000. It is an expense. Salaries and wages, it is an expense. Debtors we have already taken. See, we have already taken, see, and we calculated bad debts also. We calculated bad debts. It's already taken. Creditors, we have to take 12,000 to the P&L. That's right. Current liabilities. Creditors, we have to take 12,000 to the SOFP. SOFP under current liabilities, 12,000. Going back, done. Creditors also ticked. Creditors done. Advertising expenses 4,000. Take it to the P&L under distribution expenses. Advertising 4,000. Then loading. Oh my god. Oh god. We have another purchase related expense, that is loading, 2,000. Have to put it under purchases. Loading expenses 2,000, have to put it under purchases. 2,000, have to put it under purchases. Where is it? Oh, where? Under purchases. Yeah, that's why we left space, and we didn't leave enough space. Okay, loading expenses. Leave at least 2 lines under purchases. See, otherwise you're gonna have this problem, the space problem. Now it's okay. It's okay. Done. We took loading expenses 2, and ticket. Bank loan already taken, interest already taken. Electricity 5,000. Oh my god. Rates and insurance 3,000. Electricity 5, rates and insurance 3,000. Both are admin expenses. Electricity 5, rates and insurance 3. Electricity 5, rates and insurance 3. You have yantang space. Rates and insurance. Rates and insurance 3. Whew, okay. Done. Just enough space. We had just enough space. Oh, there is one more. 2 more. We took electricity Rates and insurance. Capital goes to the SOFP, 465, and cash 9,000. Both go to the SOFP. Capital goes here, 465. Cash goes here. No, cash goes here. Current assets. Cash balance 9,000. Done. It's done now. That means all the information is recorded in the trial balance and additional information. Yep. Every item is ticked. Every item is ticked. See whether all the items are ticked. All the items are tick, 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 ticky, ticky, tick. Done. Done deal. Now we have to start the calculations. Let's start the calculations from top. From top. All right. First, get the cost of sales and subtract from sales so you can get the gross profit. Cost of sales. Opening stock 50,000 plus purchases 120, 170,000, 170 plus 8 here, 178. Put that to the second column. 178,000. From that, minus 35 the closing stock. Minus 35 the closing stock. 178 minus 35, that is 143. 143,000. That is the cost of sales. 143. 143 cost of sales must be subtracted from sales. Sales minus cost of sales. Got it? Yeah. 400,000 minus 143. It becomes 400,000 minus 100,000. 400,000 minus 143,000. 257,000. That is the gross profit. That's why we left some space here, gross, to write these beautiful words, gross profit. Okay, we got the gross profit. It's right here, gross profit. What we do to gross profit? What do we do to gross profit? We add the gross profit with other incomes, and we have 3,000 of other incomes. Then it becomes 257,000. 257,000 plus 3,000. 257 plus 3, 260,000. 260,000. Yeah. Okay. Just to make it clear for you, 260,000. Don't draw these bits and pieces on your paper when you're answering. Okay, I'm just showing you. um, how it goes. 260,000. From 260,000, you must subtract all the expenses. We have admin expenses. Sorry, we have a distribution expenses. 4,000 plus 2,000, 6,000, 7,500 distribution expenses. And we have admin expenses. 30 plus 8, 38, 38 plus 8,000 here, 46. 46,000 admin expenses. Yeah, I'm getting these mental maths calculations in my mind. You have to calculate using your rough work sheets. Do the calculations in a rough work on the answer sheet itself. Show your rough work on the answer sheet, on your answer sheet. And admin expenses 46,000. Financial expenses only one, that is 12,000. So we take that 12,000. Yeah. Then take the total of all the expenses. 46,000 plus 7,500. 46. 53,500 plus 12,000. 65,500. That is the total. Addition of these three. $65,500. From this, the gross profit plus other incomes, you got 260. From that minus the expenses. Yeah. So a subtraction. Let's do it. From 260,000 minus 65,500. 65,500. And you get 260,000 minus 65,000. 60,000 minus 65,000. 194,500. Is it correct? 0, 0, 0, 0, 0. 10 minus 5, 5. Then 4. Yeah. 194,500. That is your net profit. It's your net profit. Net profit. You have to write net profit transferred to capital account. Transferred to capital. $194,500. Transfer into capital means what? Add it to capital right here, the net profit. We have already written the item net profit. Now add it to capital, 194,500. Yeah. Okay. Now let's take the additions from the top, from the asset section. First take the non-current assets. Land and buildings 500,000 plus machinery is 240, 740,000. Okay, then current assets 35 plus 9,000. I'll add these two first. 35 plus 9, it's 44. 44 plus 13,000, 57,500. 57,500 for current assets. Then take the addition of non-current and current. You get total assets. Yeah. When you add non-current assets and current assets, you get total assets. Total assets becomes how much? 0, 0, 0, 0, 0, 0, 0 plus 5, 5, 0 plus 7, 7, 9, 797,500. That is the total assets for you. There you go. 797,500 total assets. Got it? Now let's check whether your equity plus liabilities, all the additions, the addition of all these, whether it's gonna tally. Let's go. Capital 465,000 plus 194,500. 0, 0, 0. Oops. 0, 0, 0, 0, 0, 0, 5, 5 plus 4, 9, 9 plus 6, 15, 659,500. That is the capital section, addition of the capital section, this section. No drawings are given in this question, so capital plus net profit 659,000. Then liability section, bank loan 120. You have to add to the bank loan, non-current liabilities, you have to add the current liabilities. 12 plus 6, it's 18,000. Okay. Oh, final line. Extend this line down here. Okay. Moment of truth. 120,000 plus 18,000, 138,000 of liabilities. Addition of liabilities. 120 plus 80, 138. Now add the two, and let's see whether we get that. 0, 0, 0, 0, 0, 0, 5 plus 0, 5, looking good. 9 plus 8, 7, 5 plus 3, 8. Oh, 5 plus 3, 8, with this remainder 9, 6 plus 1, 7. Bingo! 797,500. That's right. We balanced the balance sheet 797,500, 797,500. This is total equity and liabilities. That is the end of the financial statement of Chandini Payala, and end of this year 2019 by balancing the SOFP. Children, so we are done with the 2020 Western Province paper of the third term. Yeah, yet another paper of the Western Province. I'm gonna meet you with another paper, a provincial paper. Let's take a province that is not the Western Province, like Northern Province. Who knows? These papers, the questions in these papers might end up in your exam paper, in your oral paper. So, do be with me. My name is Prabhat Ranasinghe. This is Business and Accounting Studies, paper discussions, past papers and provincial papers. Yeah, that's it. Nothing else to say. Work with me. Finish off all these papers and be prepared for your examination. For this year, for the last year, 2022, your exam, O-level exam, is very close by. Have faith, do your work. Good luck. See you soon. Bye-bye.
To watch these important lessons, subscribe to DP Education's YouTube channel right now. Click on the bell icon to stay updated on the latest lessons. Sri Lanka's largest free online school, DP Education.